everyone. Welcome to another episode of Market Insights, where we talk about all things financial, everything that's going on with the stock market right now, especially this chart right here. Is this really showing a V-shaped recovery? Are you kidding me? With everything that's going on right now, are we really going to see a V-shaped recovery in our market? Stay tuned. I'm going to talk about all that coming up next. Hello everyone, my name is Paul Zachary Shelton Jr. and I'm the Chief Investment Officer of Warwick Shore Advisors. We are a wealth and investment management firm located in Orlando, Florida, with clients all across the United States. If this is your first time coming to my channel or seeing one of our videos, I ask that you please hit the subscribe button. Please like and share this video to help me increase the financial literacy of this globe. It really helps out YouTube algorithms so they'll show my video to more people. Thus, the financial literacy will increase and make the globe a much better place. Also, if you're interested in a free financial planning cheat sheet, please send me an email to the email address in the description of this video. I'll send that over to you free. This financial planning cheat sheet will give you a snapshot of what your financial health looks like today, as well as it will give you some of the tools that you can use to build upon that, make your overall financial health much better. And I'll also throw in a free asset allocation that I'm currently using right now to invest in the market. So let's go ahead and jump into what's going on right now in the market. There is so much that is happening as of now. The market did open up positive today. The S&P is roughly flat. The Dow is up about 100 points, as there are actually is up, roughly 50 basis points right now as I check the charts. There's a lot of stuff that's going on, and are we truly going to see a V-shaped recovery? Also, Zoom is reporting today after the bell. I really want to talk about Zoom stock and those other stay-at-home stocks that are really doing really well right now. So stay tuned. Let's go ahead and jump into that right now. So essentially, is this what a V-shaped recovery looks like? And yes, I'm showing you the chart, but I'm not talking about the chart. I'm talking about the economics that is taking place right now in our country, right now in the global economy. Is this what a V-shaped recovery looks like? Historically, whenever we've seen recessions or depressions, the market does recover. And if we go back to the beginning of time, let's just go all the way back to the early 1920s, the market has rewarded investors for staying invested in the market. So we do know that from a historical standpoint that the market will recover. I mean, we need the markets to recover in order for financial capital to flow smoothly across this country and across the globe for that matter. Right now, the S&P 500 is approximately 5% from breaking even for the year. This is crazy when you think about everything that's going on in the country right now. And I'm not just talking about social unrest and social injustice, but I'm talking about the economic picture that we're seeing right now. There are still so many areas of risk right now that can really reshape this chart of the S&P 500 and make the summer look a lot different than the spring has. If you look at this next chart right here, something really crazy has happened. And something really phenomenal is going on. This is something that we've never really seen before. As people file for unemployment, the stock market increases. That is completely asinine and unexplainable. We've never had a situation like that before, where people file for unemployment, meaning that they do not have the security in their finances going forward, but yet and still the stock market says that people have security in their finances going forward. Have you ever imagined that we would see something like this take place? This movement goes against all economic theory and is essentially not sustainable in our economy as we are right now. Tim Dewey, who is an economics professor at the University of Oregon, warns that stocks may run into trouble if we see troops on the streets of America. He stated that aside from the obvious additional damage to the nation's social fabric, widespread use of military force domestically would inflame the situation further. It's just really going to make things worse. This will worsen consumer activity and slow the progress of recovery. It will actually hurt companies and businesses from reopening. In addition to that, Congress more than likely is going to continue to divide. It's already divided now with the Democrats in the House and the Republicans holding the Senate. They're just not seeing eye to eye. And it's causing a lot of snags and a lot of hiccups in producing a new economic stimulus bill. As of right now, there is a bill in place that has been passed by the House of Representatives, the HEROES Act. The Senate said that they will not pass that bill and that it will not go into law, and they will not sign off on it until allow it to go to the president. And if they do vote on it, it may not be until the end of this month, possibly June 30th at the earliest. But you still have over 40 million people that are unemployed in this country that really need it. The unemployment rate more than likely is going to trickle closer to 20% when it's released this upcoming Friday. That is crazy. And majority of those people that are unemployed are going to be permanently unemployed. I would say maybe not majority, let's say 20% or so are going to be permanently unemployed. Roughly 8 million people in this country are going to have to look for new employment because businesses just will not reopen. So how does this look like a V-shaped recovery? It's just driving me crazy to understand that we are in a V-shaped recovery in the stock market, but not in the economic market. That's the biggest key right now. Additionally, large crowds and large gatherings that are starting to take place, we're seeing them on our beaches, we're seeing them in the rioting and everything that's going on right now. That's really triggering a lot of fear that there could be another surge of COVID-19 cases in the weeks to come, possibly hampering reopening of businesses even more. So Zoom right now has been one of those companies that has done astronomically well during the COVID-19 pandemic. And they're going to release their quarterly earnings today after the bell closes, after the market closes, I should say, after 4 p.m. So Zoom reports its earnings today, and we will get the results to show how many work from home users are paying as compared to those that are not paying. I'm going to explain more of that later. And how much it is really costing to support those that are not paying. I mean, costing Zoom, they have to pay for all of this. The COVID-19 outbreak brought waves of new users to Zoom video communications. Zoom will, as I mentioned, report their quarterly earnings, and we are so anxious to see what the revenue stream is going to look like by adding additional 200 million daily meeting participants. This is 20 times more than its record at the end of last year. Many companies across this country and many schools, I should say, have relied on Zoom and relied on some of the other partners and competitors of Zoom to really facilitate business and to facilitate school throughout the end of this academic year when the pandemic caused the country really to shut down. Since Zoom offers free plans with limited services, many investors are anxious to see how much of the $50 billion valuation, which is actually up to $57 billion as it's trading right now, is really fundamentally sound. As of right now, the stock is trading lower in today's trading session. Very similar to Zoom, RingCentral stock has shot up during the coronavirus pandemic. The stock is up 65% year to date and opened down this morning over 1%. And it is trading at right around $276 per share. It's drifting a little bit lower than that. The stock is currently does not pay a dividend, but has increased its cash position over the last 3 years and may be in a position to initiate a dividend soon. If the stay-at-home rally stalls, this stock may have some room to maintain its value. It may not see such a shock. It was a stock that gained a lot during the pandemic and so far, just like Zoom, but it has not shot up as high as Zoom. And since it has not had the momentum, the same amount of momentum, I should say, that Zoom has had, it's very possible that if there is a retreat or some sort of softness in the stay-at-home rally stocks, RingCentral may be one of those few stocks that is able to maintain some of its price support. Another stock, and the last stock that I want to speak to today, is Citrix. Citrix is up 32% year to date and possibly will continue to rise as more and more small businesses shift to more cloud-based and work-from-home environments. The stock currently has a 0.4 beta to the overall market, and it does pay a dividend, although it's very low. It's just under 1%. This is a stock that can reduce portfolio volatility and potentially provide some growth in a portfolio as the work from home trend matures. The stock is currently trading down 2% in today's session. So with all that being said and everything being noted about everything that's going on in our economy and in our country right now and the stock market, do you believe that we are truly in store for the V-shaped recovery? Or is this just a stall out before we start to see the economy truly take over the trading of the stock market and cause additional volatility? There are so many catalysts right now in the market that could cause additional volatility, and they're coming out more and more every day. You got US and China still has tension. Nothing has been resolved yet with North Korea. That's still simmering in the background. So there are so many things that are out there, and not to mention everything that caused all of this in the first place is the coronavirus pandemic, which we do not have a vaccine for as of yet. So please leave your comments below. Give me your thoughts. Let me know your ideas, how you're investing, and if you do truly believe that this is a V-shaped recovery, where do we go from here? Is the market going to track higher? Are we going to end this year up maybe 10-15%? Or is it possible that as we get into election season and we see some ancillary volatility from that we could see the market retract and pull back a little bit more? If this is your first time coming to my channel, I ask that you please hit the subscribe button. Please like this video. Please share this video to help me increase the financial literacy of our globe. Thank you so much. Have a great day.